Good morning. Friday the 13th, 2015. Friday the 13th. Spooky. All right, let's make sure that nothing spooky happens with our portfolios, though, okay? We have to trade smart today. Up $15,000 this month, 13 days in. I want to make sure that I keep that money and add to it before the end of the year. I should make another 3,100 today on the credit spread. I detailed that in today's watch list notes. So if you've been following along, good job on that. Hopefully you paper traded it so that we can continue to learn from this strategy and apply it moving forward. The market. The reason why we did the credit spread in the first place is because we thought a pullback was coming to support. And sure enough, here we are on the date of expiration in those SPY calls that we sold, right? We sold the SPY calls because we thought resistance was upon us, right? We pointed out this resistance in previous lessons, and we sold those SPY calls back in through here. We sold them, it's important to note, at 213. You see why? Remember in the DVD I say we'll sell them when we get to resistance and a few points out further than that. That's exactly what we did. So the SPY hit its head on this technical resistance up and through here. It was also overbought from the big run. All right, the relative strength index was over the 70 line or just near over the 70 line when we sold those calls. So we sold those calls anticipating this pullback to support. And sure enough, here we are on the date of expiration. We're going to collect 100% profit, or $3,100, on a trade that only took $10,000 in margin. That is the insurance company. That's what we want to be, and that's what will happen today, provided that the market doesn't make some crazy move above 213, which clearly it's not going to. All right, so great job there. Moving right along, let's take a look at today's watch list. Oprah Winfrey, earnings win, Stevie Cohen. The combination here is setting up for a supernova squeeze into the weekend. Let's watch for it. All right, this is a type of trade that I'll take here around 24, and if it goes below 24 and trends to 22 for whatever reason, today into Monday, Tuesday, whatever, I'm not interested. I'm taking it looking for the supernova squeeze. Up 4% on a down day? Are you kidding me? Oprah Winfrey, billionaire investor. Earnings win. Stevie Cohen, billionaire investor. This thing has a really good chance of going higher. Now, I know 24 is high price for many of you, but remember, I use dollar amounts to dictate my positions. So I buy roughly 20% of the portfolio size in any trade. So I'm at $250,000 in the portfolio. I'm doing like $50,000 on a trade. I'm not using price as a gauge. I'm using percent return based on portfolio size. So I'm looking for 5 to 20% on this trade, and I'm using 20% of my portfolio. So at the front of the year, when I was at $90,000, I'd be putting about $18,000 into this trade. Now, if the risk seems greater than the reward, I might go half my portfolio size, so 10% of the portfolio. In this case, it would be about $25,000. Hopefully that makes sense when applying your portfolio to these trades. It's not about the price of the stock. It's about whether or not this is going to $30 or not, and it has the chance to do so. So 1,000 shares at 25, 10% of the portfolio could deliver me $5,000. And that's ridiculous. Going back to the front of the year, that's a 5% return on my portfolio in just one trade, right? So that's the beauty of compounding the portfolio over the years. That's my favorite stock today because there's 2 billionaire investors in it. Who knows if a third shows up to the plate. It was up 4% on a down day. It's a textbook continuation pattern pending breakout, video lesson 2 and 3. I love it, all right? I absolutely love it, so I'm going to look for it today. SIEN. Candle over candle starting to set up in through here. It tried yesterday. The market tanked, so I got out. I'll probably retry it today. Not 100% certain, but I really like this company to put in a big move at some point in time. Very difficult to predict when that is, but a lot of bad news is factored in here. Any good news, and it explodes higher. All right, there's your Fibonacci retracement. Unfortunately, it wasn't perfect with regard to the retracement, but we did get the reversal yesterday, textbook from 240s almost to 280s, 10,000 shares, total profit, $4,000 potential. Even if you capture half of that, that was a good trade yesterday. Here's what the price action looked like. And here's the beauty of penny stocks, with or without you, right? They're going with or without you. 240s, almost to 280s. You're going to sell that for 5 to 10%, rinse and repeat. We'll look for the higher low pattern. This could regain a lot of momentum that it had today. That was the reversal we were looking for. Let's see whether or not it can get into the low threes now. That looks like a pretty good trade to be looking at. Big news for the company. Earnings are out and it's holding range with breakout potential above 160. I really like the look of this stock here. If it can hold these levels, this is a major pivot point in the stock. And so whether we play this one next week or today, we want to be spotting up on this one because this could certainly start to attract some bigger portfolios, institutional traders. They take down bigger chunks over a longer period of time. Above 160, there's a lot of range here to 280. I mean, just a ton. There'll be stops, obviously, at 2 and 240, right? You can see that on the chart here and here. But all of that are opportunities to get in and out of the stock for huge profits. So I'm watching yesterday's close, which was 137 as kind of my area for entry, and then half off at 160, and let's see if this thing goes cowboy on us. All right, it just might. It has the makings for it. It's hard to say whether or not it'll happen, but not one that I want to rush into at the open. I'm going to allow it to trade for a little while and see whether or not it bases, because if it holds, that's where shorts are going to start to get nervous. All right, let me remove Fibonacci from here, and what we're looking at is a trend line entry here on a reversal. So big news, earnings win, faded by shorts, higher low entry, back to support. There was the wedge that broke out, so you can see how it's right back to support. This is a buy zone now. If it holds the 760s, I want it to somewhere in the 8s. I do not want it if it comes back down to 7, even though there's support there of the SMA 200. I'm looking for the trend line. This is where it broke out. All right, this was the flag or the pennant that it broke out of. When it retraces to that trend line, that is a buy zone. If it holds going into Friday, the shorts that were collected in through here could provide the bid to squeeze it up through there. That should make textbook sense to you. This is just basic technical analysis. And my friends, that's all you need to know to survive in the market. You don't have to get too complicated with trading. In fact, I think if you do, it's just going to lead to frustration and eventual quitting of trading. You don't want that. All right, ANFI, I am going to show you the Fibonacci on this one. So we'll go 1 minute. Let's go 3 minute, 3 day. I might even already have it drawn for you. Nope, not yet. But so we'll go with Fibonacci on this one because it's definitely a pattern that we want to apply. And so there's our reason for liking this one right around 7 to 720. It needs to hold above that 7. You see 708, 671, 634. We don't really want it today if it's going to weaken early. All right, because this will be hard to get back through. Why? Because Thursday or Wednesday and Thursday, there were a lot of buyers in here looking for it to turn back up. So if it breaks down to 671, when it comes back up, that's going to act as resistance. We kind of want to see, for the trade to work today, it hold this level of support and then go for the 8, maybe even higher price range again. Hopefully that makes sense. It's just there's not enough time in the day if it breaks down and then breaks back up. I could be wrong, right? It could chew through that area, but I won't take those odds, most likely. But that doesn't mean next week we won't look to swing it off 670. So let's see if 7s hold today. The best situation is 720s holds. It already tested 7 once here. If 720 holds and it rounds out, watch for 760s to act as resistance, followed by 8, and this could be a breakout above that level. So ANFI, really good news, and it's already been heavily shorted. So this short selling in through here, all right, all comes into play in this new uptrend that it's created with the news that it had the other day. Last but not least, this is a horrible company. They just can't seem to string together an uptrend. They just constantly bleed the stock out, and then they drop some good news and do an offering and repeat. At some point in time, though, I think they have the potential for a really big uptrend because of the client base and the potential for big contract news, which would lead to revenues and an eventual profitable company, something they just haven't been able to accomplish. Now, 210 down to 147, pretty big drop. They missed on earnings. The outlook was bleak. It's a story stock, though, so it's oversold. Let's watch for the turn. And usually what we want to watch for is the volume to die off and then for it to go candle over candle. Now, that's not always easy to spot on GVO because the trading has gotten less and less as the company drops more fluff and more fluff and more fluff press releases. The good news about them dropping fluffy press releases is two-part. A, it's oversold, so we have a good technical entry, meaning there's nobody to take profit. And any actual good news provides huge upside potential. So we're kind of we have a backstop to the downside and we have huge upside potential. The downside is the company releases another fluffy press release and it goes up 6% in the pre-market and then it's down 6% by close, right? Shorts love those fluffy press releases. They just abuse people who trade the fluff, and they pile into that, as they should. But we need to understand that not too long ago, if you look at the 1-year chart, they did have some legitimate news with Alaska Air, right? And so that moves the stock from 2 to 7s, and that's kind of what I'm talking about. So as it drifts into this oversold condition, if we get a candle over candle and the volume dies down, it was down 5% yesterday on light volume when the market was, getting hit pretty hard, tells me that the sellers are drying up. I want to buy it where I can then sit in it for a couple of days without getting stopped out. I want to be able to get in there and not get stopped out because I'm trying to catch that big press release. Again, this is a story stock. We're kind of rolling the dice that some news, some actual good news might be coming, understanding full well that we might have to stop out and retry or catch a fluffy press release and take a 5% win. Both things aren't bad when the potential for this looms in this stock. And since we haven't seen that in quite some time, it increases the odds of it happening. Okay, that's the watch list for today. Lots of notes. Really exciting month. Like I said, 15,000 so far, and we should capture 3,100 on that credit spread today, which will take it to 18,000. That's a great start to November, and I'm going to do a good job this month of protecting it, unlike last month when I was up very similar amount and then finished the month with $4. So defense is always a good offense. Take it easy.